Alrighty, hey traders, John Howe here. So I think I've got seven things anyway, 6 or 7 things that I really want to cover with you today. That's on my mind right now. We're going to be focusing on things like big picture, macro picture, Ray Dalio cycles. If I just bring this over here, this is the little PowerPoint thing for. We're going to be looking at the big long-term cycles here when it comes to just the overall sentiment this here. Going to be looking at something like the jobs report, also the interest rates as well too, when it comes to the markets and what's that saying here. Also, we're looking at the Ray Dalio, the big tech cycle when it comes to the Ray Dalio as well too. And we'll also be looking at the yield curve here as well too. There's a lot of things we're going to cover, and also be looking at stock market, gold, silver, looking at the charts as well too. So there's a lot of things that I really want to cover with you guys today. And my hope today, guys, is to give you a bit of a understanding where we're probably headed over the next, say, year or two. Big picture, right? So not right now. And then also I'll give you some short-term analysis of what's happening right now. And this is the differences, right? We want to be focusing on short-term and long-term as well too. So short-term, we can have some movements, but then also long-term, we just want to be keeping an eye on the long-term picture because there's these long-term massive cycles at play, as you probably know from there. So before I start, guys, if you're struggling right now and you're confused, you're not sure what to do, and you just want to simplify your trading, then my training is for you. If you go to John's Free Training, this is a webinar that I'm running right now, guys. And basically, with over the last 20 years of my own personal trading, you're going to learn my #1 trading system that is very simple. It's only one chart pattern and one moving average, but it's really high success rate. And there's a lot of things that I'm going to be covering with you on that training as well too. So if you're struggling right now, or you just would like to simplify your process to where, like for me personally, I only trade 1 hour per day. That's all I do, and there's a lot of things that I do. So anyway, go get access to that training there. So one thing I want to start off with is this Wall Street cheat sheet for you guys. One of the things that I'm always trying to do myself as a trader, because I'm a trader first and foremost. And that's why my coaching program is so successful, right? Because my main focus and my main focus for me is to make a lot of money every year from trading. And again, that's where I have a 1% group that I'm with every single day. There's a second link in the description there, guys. You can apply for it. But that's the reason why that's so successful. You can see all the testimonials in there as well too, on that second link in the description. But I'm a trader first and foremost, and for me, I want to protect myself. Right, and I want to see what's coming. So it's also really important to just to see the truth of where we're at right now, and to see where we're likely to head moving forward, so we can just protect ourselves. And whenever I look at this here, I'm looking at this chart here, this Wall Street cheat sheet, and I'm looking at it from a perspective of not from an emotional point of view, right, or not from a point of view of this time is different or there's a story there, right? I'm looking at it from a perspective of these cycles that we go through in these markets. Because as you probably know, if you've been part of the markets, I would say probably 10 years or more, you would have experienced many cycles through these markets. Now, one of the big things that I've personally seen myself is that markets don't make incredible bull moves when there is so much positive sentiment around that market. I know it sounds counterintuitive, but that's the reason why, like right now, I'm starting to put warning bells around the metals and miners. Not only from a chart perspective, because we're in a bit of a frothy territory right now, but you probably know yourself, right? It's it's pretty crazy right now to see the sentiment around these markets, and so you can see there's a lot of euphoria. There's just so much positive sentiment around this, and even in my comment section, right, there's people like, John, you're an idiot. We're going to 10,000 right now. It's the end game. It's like all this sort of stuff. And one of the things that I want you to try, I want to encourage you to be. I don't want you to be focusing on right and wrong. This guy's right. I am right. You're wrong. Like that sort of stuff. Okay, because no one definitely knows what's going to happen. We could just do the best we can, right? What you want to be doing is you want to be focusing on things when you're approaching the markets, when you're approaching things in the markets. You just want to say, okay, where are we at right now, and what's likely to come? So we can be open-minded to this. And one of the big things that I learned from Ray Dalio when we talk about his cycles, and by the way, when we come down to his cycle analysis of, this is where the start, expansion, and overextension, and this is where, like, even for the stock market, just the big move in gold just recently, it's very similar to the prior to 08, right? Gold had a very big move, and if I actually bring up the actual gold chart itself, you'll be able to see. That's the Bitcoin there. You'll be able to see what I'm looking at here. So I bring up the weekly chart, okay? And we go back to the 08 period. You can see, look, this is what gold did, right? So we had a nice little breakout here. We actually went sideways for a while. Then gold broke out, and then we had a drop into the recession. So if there is going to be a recession next year, which I do believe, gold will get hit as well too. And then I do see, yes, what you can see here, see how this second leg here, after the 08 crash was much bigger. I'm actually expecting this here for gold, by the way. So you just want to keep that in mind, right? So if I'm looking at this level from here and I go to this Ray Dalio thing here, one of the things that I really learned from Ray Dalio, and it's really helped me stay calm and look at the market from not an emotional or a biased point of view, is that. And one thing I'm always questioning myself, and one thing that Ray Dalio says is that the biggest mistake that most traders, even investors, make is that they think what has done well in the last couple of years is likely to continue doing really well. And that's not the case, right? Like, every single market has its cycles. And then every now and then you will find maybe 5 or 10% of the time, these things just keep going on. These bull markets just keep going and going and going. Okay. You don't want to, by the way, FYI, for me personally, I can't have a long-term, decades and decades and decades success in the markets by trying to trade something that only happens 10, maybe 20% of the time. You see what I'm saying there? So I want you to be thinking about that when you're trading the markets. Are you trading something that, for example, gold right now, as an example, gold. There's a lot of bullishness around gold, and I've been calling for, this is gold here. So I've been calling for, this is the last final move in gold. By the way, if you guys have been watching my videos for the last month, you would know when this market was going sideways, I was in my video saying that I'm expecting one more move in gold, and this is what we're getting. So, and then I'm expecting a big drop. But let's just say I'm wrong, right? And let's just say you're right. And there's a lot of people that have been saying I'm wrong. You could be right, but the thing I really want you to be thinking about is that I think your ego, if that's the situation you're in right now, and you're like, John, you're wrong, gold's not going to go down, it's not going to crash, this time's different, the debt bubble, and you're going to go down that path there. I want you to be thinking about your journey as a trader, and how is that going to help you 12 months from now, 5 years from now. You see what I'm saying here, right? Because one thing that I've found when it comes to my trading is it's not about being right. It's not about trying to have a guess. Well, I hope gold keeps going to 10,000 as an example, right? And then we start to look at these big long-term monthly charts. Even these, some people were mentioning on my videos about you should use logarithmic chart, right? And I talked about, and this is the actual GLD here. I just talked about on yesterday's video, a bit of a trading technique in yesterday's video was, you can see here that generally speaking, that whenever I apply just this one moving average, this is the logarithmic chart here, and this is just a normal chart, okay? But both scenarios, you'll be able to see that even both scenarios, the market doesn't get too far away from the moving average before we start to come back to it. Make sense? So when we look at this level here, we can see how that it has a nice move up where we eventually come back to it. Nice move up. Now this is a monthly chart and we come back to it. Now, by the way, that's a few years there. See how far away we're getting from right now, right? It's not the exact science, but when we start to get too far away from it, it just says, hey, we've done so much movement on the upside that we just need a bit of a cooling off period right now. Okay, and that's what will happen, right? The market, if this is a very big, strong bull market out of gold, a bull market is higher lows, right? So we just want to understand that even if gold does drop down to here and have a big drop to that down there, or if I go to the gold price, this is the gold price here. as this bull market unfolds, what I see happening is we might get a move to 4,000 and then we get a drop, and then that's the overall big bull market there. See that through there? So I want to really sort of encourage you down the path of I want you to be thinking about this here, okay? Now, I talked about gold just then, about people saying gold's never going to go down, okay? And we know that's not the case, right? Gold is, even in a very big bull market, we do have these corrections and then it goes back up again, right? This is the monthly chart here once again. This is the GLD chart. Like, you can just see the swings, right? We just know that the market will continue to, even through here, right? We go through a big bull market and we get a little pullback, and we go through a big bull phase. We're going to get a little pullback, right? That's what a big trend is, right? This is just, so for you guys that are very big bullish on gold, I'm not calling complete disaster out of gold. No, I'm just calling a very nice, good correction, a correction back to what Howard Marks talks about is the mean. And as you can see, that's generally what happens, right? We get a nice, good bull phase for a while. We get a pullback, good, really big bull phase, good pullback, 50%. See what I'm saying? That's all it is on the big picture there. And then we get going again. So we can see that through there. Now, one of the things that I really I was talking about through there is I want you to be, and this is me trying to coach you here, okay? A bit of a free coaching advice for you guys. Over the last 20 years, if I have gone to trade the markets based off a hope or I think or I'm right, something like that, then, okay, let's just say I am right now. And for example, a lot of people have been around the gold market, right? A lot of people around the gold market are saying we're going to 10,000. And you may be right. I may be wrong. Now, by the way, I believe we're going to 10,000 as well too. I just believe we need a bit of a cooling off period. Why? Because that's just what markets do, right? Markets just don't go straight up, even in a very big, and even in bubbles, right? Even in bubble territory like we're in right now, and look at the gold chart, that's pretty vertical. All right, we can spot the bit of frothiness. Doesn't mean we're going to peak right now, but we just be alert over the next probably 3-6 months. We're probably likely to start to experience within that time frame a nice good correction. Okay, and the purpose of doing that is when that comes, and you know it's going to come, you're not caught off guard if you are a trader investor. Okay, so going back to what I was saying before around these markets here is, I want you to try to be thinking about your longevity in these markets. Okay, so for me personally, I have not been able to do, you can't have long-term sustainable success from just trying to have a guess out of these markets. If you actually want to make a lot of money from trading, we need to have some solid foundation, right? And what's that solid foundation? That solid foundation is this here, okay? And I want you to be thinking about this here. Trading the markets is not going to the market now saying, well, the dollar's going to crash, the debt bubble's going to explode, the great reset's here, I'm going to go buy gold. Do you see how now I'm trying to create up a story? And let's just say you are right what I just said there, and that you do make a lot of money there. Now, 12 months from now or 6 months from now, when you go to place another trade on, what are you going to do? You're going to create up another situation? See what I'm saying? They're like, I've never been able to do really well out of that. But one thing that I'll be able to do is that if we have a really good proven pattern and proven system that we can rely on, that's the only way I can have long-term success in the markets. So if you are trading the markets now and every single month or every single week or every single few months, you're trading all these different things, spreads, buying options, writing options, buying this here, like there's a lot of things there. We want us to simplify the process. And as you can see here, Bruce Lee once said, I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. This is the only way that I can develop true deep confidence in my own trading. Again, guys, I'll teach you my trading system for free on that webinar, that first link in the description there, if you want to learn the actual system I use. But I'm trying to share with you, you guys want to become professional traders, right? A lot of you traders are not doing well right now watching my video. And that's why you're on YouTube watching my videos. And I'm trying to show you that it's not about trying to let me have a guess here. Let me try this out. There's nothing about try or guess. It's about trying to find a system that works most of the time, that has, that works most of the time, that has a good win-loss ratio. And ideally, you want to be able to have these patterns where a good percent of those can have really big profits. And as you can see here, the same principle applies in trading. Success doesn't come from chasing 10,000 different strategies, indicators, or shortcuts. It comes from mastering one system, living it, breathing it, and refining it over 10,000 hours. The best traders in the world don't get lucky. They get consistent because they've gone deep instead of wide. Focus, repetition, and discipline turn a good system into a wealth building machine. Your edge is not variety, it's in mastery. So this is one of the things, as I've continued, I've been trading the markets now for 20 years. And it's something that I say to my kids all the time about, because they play basketball, about like, listen, you want to get good at shooting, right? Well, how many shots did you do today? They've got a basketball ring at home. So how many shots, did you do any shots today? And so sometimes they might they'll go play their basketball, like my older son, Curtis, he's 17, and sometimes he gets so frustrated. But I simply say to him, like, like he might take 2 weeks off, right? There might be a 2-week break, 2-week school holiday break. And then he comes back and then he's not shooting really well and he's getting cranky and he's blaming other people. I'm like, listen, Curtis, like your 2-week holiday, how many times did you do, how many shots did you take every day? He's like, oh, nothing. It was school holidays. I'm like, what does Michael Jordan do? Or like these really successful people, what do they do? Oh, they do a lot of shots. Oh, well, if you want to be like them, you got to be like them. So we can see this here, right? We can see this is the end. So this is where like a lot of people, they just simply got this trading game wrong. And this is where like a lot of ski curve starts to come involved with it. And so this is the picture for you guys. And the lay of the land, I hope you can see, is for me personally, as I said before, the reason why my trading is so successful, right? And the reason why I'm part of the 1% and I do really well, and that's the reason why I have one of the most successful coaching programs out there with my 1% group. Again, that's that second link in the description there. Is not that I'm lucky, right? And because I actually don't try and guess. I give you guys market updates around here, what I think is coming up. But when it comes to my actual trading, most of the time, like 90% of the time, it's just following certain rules that I know that's going to give me a probability of having success. Now, this is hard because then the other side of this, what I just said here, and as you can see, I've got this here, right? Do it again. 1, keep doing it even more again. 2, keep doing it again. 3, and 4, and that's how you gain. So, and this is where, like if you're going through, I call it the cycle, right? So let me go through to here. Let me go to this screenshot here. This is a screenshot that I always show my coaching clients. And this screenshot here is what I'm always showing my coaching clients. But initially, when you're first starting out, I understand you're going through the discovery phase. This is what's so hard about trading, right? Because when you're going through the discovery phase, you're learning a lot about it, learning all these different things, right? But then there comes a point in time where you got to say, okay, I've just got to pick one system and stick to that and be disciplined at it. And this is where on the other side of trading, on success in trading is not excitement. It's not getting it right or, having a guess, right? It's like, for me, when I'm going to the charts, when I open up my charts like today or tomorrow, right? And I go to the markets, I'm not saying, okay, let me see what looks good. I'm like, no, I'm opening up the charts and I know the exact pattern in my mind I'm looking for because of my trading setup. And now I'm going to go try and find that. Makes sense? So I understand if you're and this is where like the first 5 years I would say is so hard because you don't understand this, right? You're looking at all these different things and watching stuff on YouTube and trying to get ahead and learn. And then suddenly you blow your account up. You try this and try that, and you might learn a trading system. You take a few trades, lose a bit of money, and then you go on to the next thing, and the next thing, and the next thing, and the next thing. So that's what I wanted to walk you through there with that there. Now, one of the big things here is I've just been noticing here when it comes to a few things here, right? So the first thing is there's a very big disconnect right now when it comes to the job openings. As you can see, this is the orange line and the S&P 500. Very big disconnect there. All right. We also can see, and then also this one here. One of the things that sort of surprised me when I saw this chart is like, because I always thought, there's the thinking there. I always thought that, if interest rates are going up, that's going to put pressure on asset prices. It's definitely done that for real estate, hasn't it? But as you can see here, that we generally go through the same repetitive cycles, don't we? The interest rates go up, then we flatten out for a bit, we pause, and then we go through a cutting cycle. That's the crash. Interest rates go up, we pause, we go through a cutting cycle, crash. Interest rate go up, we pause, we go through a cutting cycle, crash. Interest rate go up, we pause, we're going through a cutting cycle. You know it's going to come, right? Like you can just see it coming. Now, unfortunately, the thing about this level here is as the market continues up, what's likely to happen is something big's going to come out and start to create a ripple effect in these markets, and we're going to see something really big happen. Like there's something, I don't know what it is, but the market is screaming here. I would not be too surprised over the next couple of months to see something really bad happen something bad happen that's going to send shockwaves through the system. That's going to cause a freak out and a move on the downside. So we can see that through there. Now, the other thing I want to sort of show you there when it comes to this big long-term picture here that I'm being walking you through here, guys. Once again, you can see here, we're at this level here. And that means everything, and especially like, if I look at this is the cycle here, but if I look at this level here, my goodness, right now, gold and silver are starting to play catch up to the crypto market. What do I mean by that? Well, you guys know, right? Every person, there's been so many people around the crypto market, especially Bitcoin. There is something really bad going to happen with Bitcoin, and it's going to devastate so many traders because the bullishness around the crypto market, and in particular Bitcoin itself. Oh my goodness, I have learned that whenever I start to see so much bullishness around a market, it's a warning sign that we need to step away. And this is why I see with gold and silver right now, right? It doesn't mean we're not going to go up right now, and I'll get to the charts in just a minute at a gold, right? So for you guys are saying, John's calling crash today. Like, no, I'm not calling crash today. In fact, I believe we could even maybe have another move on the upside when it comes to gold, and we may even go to 4,000. This is for the overall basis, right? This is to try to keep you instead that if you are long gold right now and your leveraged options or whatever, and we do go to 4,000, you want to keep a level head that, no, this is probably not it. But and this is where like, I just see something really bad is like you're going to hit these markets. And as we start to get into this euphoria phase, it's pretty huge from there. And the last thing when it comes to the big macro picture before getting to the charts today, this is from gurufocus.com. And you can notice here from the actual spread itself, right? Notice here from the actual spread that every time we actually, all right, I'll keep it very simple for you. When we get below the red line, that's a signal that recession is coming. When we get above the red line, I know I'm trying to keep it simple for you guys, okay? Inverted, not inverted. You guys know what I mean, right? Below, above, gray is recession. Below, above, gray, recession. Slightly, this is 2020. Below, above, what's going to happen here? Right? Again, recession bar, recession bar. When we get below and above. And so, you know what's coming, right? There's going to be another gray band here. What's a gray band? Recession. What's that mean? Things are tightening up. We may be in one already right now. Okay? And that's probably going to mean we're going to see some weakness on the downside for the markets here. So there are the main things that I really wanted to sort of focus you on when it comes to that there. And just remember, guys, that actually, let me actually go to, I'll bring up the charts now, and we can go through the market here and show you what I'm seeing right now. So if I go through and have a look at these markets here on an overall basis, and I'll start to look at gold first, and we'll start to go down these markets here. So one of the things you can see here with gold is just we're continuing up. So we are still in a very big, strong bull market right now. So nothing's changed. And we can see this is what's happening with the GLD, and this is the obviously the gold price itself from there. Very, very, very nice movement to the upside. And one of the patterns that I really want you to be focused on too, from a trading purposes, guys, I want you to apply one moving average to the chart only. Okay, everything else just remove. Like not even volume at this time. Okay. And what I want to teach you something, I'm going to teach you something that's going to really help you have the odds on your side of having success in the markets here. So firstly, I want you to remove all the indicators, okay? If your chart looks something like this here, which is just a whole bunch of stuff here, I promise you, that's where my trading, right? That's where, like, if I go back to the PowerPoint here, you can see here, with over 20 years experience, I will show you how to eliminate confusion and complexity in your trading. That's the reason why I've got that on the webinar registration page there. The thing is that if you're done here, I promise you, then you're going through those phases, right? It's like, do I sell? Do I buy? Like this sort of stuff here. This here is just confusing the crap out of me. And therefore, we don't do well. But this is what I want you to do. Just remove everything. See what I did there? Remove everything. And I want you to apply one moving average, okay? Now, even for you guys that are even day traders, right? Or you're maybe short-term swing traders, in and out in a couple of days, maybe a week. Or like me, I prefer to not trade a lot, but look for more longer-term swings where I can be in it for a couple months and jump on a big move. Therefore, I can have these really big profits, small losses. Then this is what I want you to do, okay? See how this green moving average on a weekly chart is a 24 moving average. Now, why 24? It's just one of the moving averages I've learned from my mentor. Okay, it's nothing special. You could use a 20 if you want to, but it's more like what the moving average represents. That's going to help you when it comes to, again, just increasing your success rate with your trading. And what I do is this. Is if you see this, again, nothing on the screen, just the weekly chart itself. Whenever the moving average is trending strong in a direction, okay, so it's the trend, not where it's pointing. Let me explain something here. Let me walk you through this here. So if we have an overall sort of, I'll bring up the green here. So if the moving average is overall doing this, see how it's up and down, but it's more like the overall movement is flat. See that through there? But if we've been doing this for a couple of months, well, now the overall movement is what? It's strong. See, that's very strong to the upside. That's what I mean by trend. Not where it is right now, where it's pointing, but where has it been really, especially for the last couple of months through here. So whenever it's doing this here, as you can see, the reason why look at this here. This here is what's called flat. It's not going up, it's not going down. The overall thing is flat through there. And then we started to pick up through here. And as you can see, now look what's been happening. Now we're starting to get some strong trending through here, right? And then it continued up and continued up, continued up. A few things here that I really want to sort of help you with your trading here. So the first thing, as you can see, just by looking at gold chart, and this is even for you guys that are very bullish with gold, you can see gold goes through their cycles. And this is the one thing I'm always looking for. And this is one of the things that actually helped me stay in my SIL trade recently. And I'll show you that in a minute. By utilizing this technique, which helped me have, I made 280% return recently on my SIL, which FYI guys, I got out of my SLV and my SIL trade recently because I'm in an option trade and now I'm tapping into just less than a month on my option left. And I'm at a big profit as well. So it's called not trying to pick a top. People think because I got out, I think there's a top going to be. Like, no, I got out because one, I made a lot of money, like 280% return on my SIL and 75% profit. And I have that, and then now I'm tapping into the last month of that option. It's called being smart about your trading, right? So we can see this over there, right? So we can see the moving average. See how the moving average is coming up through there? One moving average. And there's a few things that you want to do here. Firstly, is that if the market gets too far, if the market does go for a run and it starts to get too far away, we don't know the exact high, but we can get a rough gauge, right? It's a rough gauge and a rough gauge around when we start to get a bit of a distance away from the moving average. We know we've done too much movement in that direction, and we need to go through one of these what's pullbacks or what an actual trend is. Okay, because the trend is what? Up, down, higher, low, up, down, higher, low. So that's an actual trend, right? Up, and then we go do that, and then we're doing this all through here. So trend is up, down, higher, low, and then something like that, and then maybe something like this, like it's been making these higher lows. So that's the first thing I'm always utilizing this on a weekly chart, because I'm looking at the daily charts for my entries. First thing, if we're too far away, even if you're looking to get in on a daily chart trade, you're looking at the daily charts for a trade, you know that we're getting too far away from the moving average. So now we're becoming a bit too extended, and you know that's going to decrease your probability of having a successful trade, especially decreasing your massively of looking for a trade that's likely to make a big move. Make sense? Because you can see from that bit more longer term perspective from that weekly chart, you can see we're getting very long in that tooth before we start to go maybe do this for a couple of months. See that through there? So that's the first thing that I utilize with the moving average. And the second thing that I utilize the moving average, and I'll show you how this worked with my SIO on the daily charts, is wherever if we have a strong trending moving average through here, meaning the market, see how the moving average is trending strong through here, well then we to have the best chances through here, this moving average is like a momentum indicator. I call it momentum in the markets. And if there's if the market is, if there's, as you can see, if the moving average is very strong to the upside like that, there's a lot of momentum to the upside. You don't want to be going against that. Okay, and therefore that's one of the things. If you saw my videos over the last month, I've been saying one more move out of gold. One of those things I was using was the moving average because there was still a lot of strong momentum through there, right? When things start to go a bit of haywire, is what? Is one when we do start to get a bit more of a correction, but you can see how, look at here, strong, and then the moving average then starts to flatten out there. See when the moving average does that? That's when it's all sort of pretty much game over from there. And so I utilize this again as actually, I remember trading, this was SLV, right? Sorry, not SLV, this is the Russell. And look what happened here. Okay, so we had a very strong trending moving average. But then look what happened, right? We actually, see how we went flat? Do you see how we actually, see that through there? See how we actually tried to break out there? Why was this a false breakout? Because it had no momentum, or the moving average was flat, so there was nothing continuing to push that. Make sense? And then we actually reversed from there. So FYI for you guys is that if you do trade breakouts where the market's not doing much and then we do break out, but you're getting into false breakouts, it's either happening for one of two reasons. One, the momentum has gone flat, therefore there's no momentum from there. Or secondly, we actually already made a big move into the breakout. And so, for example, Barber is an example of that. So Barber, if we bring up just this chart here, and we bring up Barber, you can see here that if something is already making a nice move for a few weeks like that, and then we get a breakout, it's probably going to be false breakout. So one is a flat moving average, or two, it's already been going up, and then we get the breakout, we're likely to see a false breakout. Now, what I just said there, right? Then you can see what happens here, right? We've been going up for a few weeks, and then we get the breakout. Because think about this from an energy point of view. Okay, an energy point of view simply says what? This is like, the market's like an energy source, right? If the market's moving in one direction, they've been using a lot of energy, using a lot of energy. And then we break out, we're getting towards the end of the energy move, right? So energy using is when the market's buying up. The best breakouts that I've seen is when we go through something like, we get the pullback first, and then we go through there. Let me show you some examples here. So, that's not that one there. Let me bring up, where's my PowerPoint? Okay, here's my PowerPoint. So let me show you some examples of what I mean here, because then I'll show you an example of what I mean here, so you can actually get an actual representation of what I mean by waiting for the sideways period, and then the breakout is going to give you the best chance. And since we're looking at bullish scenarios, I want to show you an actual bullish scenario, right? Again, this is just all different setups here. I'm looking for one that's actually within that channel there, right? Like here. Okay, so see what happened here? See this really big breakout here that happened on this particular market? What actually happened? We had a move up, did we? But then see how we actually had this pullback first? So whenever we get this pullback here, then we break. Now we're probably going to have a really big move, right? So first one is the flat moving average overall, but then the second one is not getting this sideways period is when the market's refueling. And I found these breakouts to be, if it breaks above resistance, if we can get it before the resistance, we're likely to break out. Or the next best scenario is something like this here. The next best scenario for trading is when we break above the resistance point, we break up, but then we just go sideways. And then that means if we break up and then we have this, then if we do that, then now either way, I call them, this is actually called the channel setup, as you can see. Channel setup number 1 is actually in the channel. Channel setup number 2 is we actually break out and then we do the sideways pattern out of the channel. And that's when we end up getting explosive moves from there. Make sense? So let's actually go back to the charts now. So you can see what I was looking at there from that perspective. So moving back now through to gold and where we're at right now, you can see what's happening here, and we're probably likely to continue from here. I don't know when the top's going to be in, but we do know we're getting very long in the tooth from there. And we can see that we're probably getting towards the end of this overall bull phase, because that's what the markets, we go through these different swings here. And I believe we're like this from all particular markets. And again, what you don't want to be doing as a trader is trying to get the exact top in the market, because you don't know when the exact top in the market is. And I'm pretty sure a lot of you traders who have tried to call tops and bottoms, or you may be long right now and you think gold's going to go to 10,000 and you hold, and you experience the correction and so on and so forth, right? Where what did I do as a trader? I've already banked a lot of profits, and there's a lot of traders still sitting there hoping and praying. Now, I talked about SIL, and let me just show you this level here. So SIL, 1, see the moving average coming through here? But I like to use remember I said the 52 as well too, right? I like to use the 52 moving average on the daily charts. And I'm utilizing it from what? The same perspective as what I said before. Remember I said before that if the moving average is overall just going, see how it's overall sort of flat through here? And then we started the trend strong. See how it's really trending strong through there? I actually got into right here. I actually got into SIL right here. Now, why did I get into SIL right here, and why did I stay into it? Well, I got into it because that's what I was looking for. But secondly, I stayed in it, and I knew we're probably likely to see another nice move up because of 2 reasons. 1, the moving average is trending up very strongly, as you can see. Right? See how I'm tying it all together for you now? But then also, secondly, this here was a high. Notice we went sideways and then we broke out and had a big move. So see what I did just there? I tied it all together for you. And this is actually what led to me having a nice move. What happens to SIO right now? I don't know exactly, but I definitely know we're probably going to go, we're definitely long in the tooth when it comes to that. If I go to the weekly chart, we may have more upside into 70, 75, but this is where, for me, I'm not trying to get the bottoms or tops, right? If we do have this next 20%, that move there, and then we go through another correction, not for me. I'm completely out. Or from a trading purposes anyway, we go from there. So that's what I'm seeing there, guys, when it comes to the overall markets from there. And we can just see this overall here. And the same thing for all these markets, right? Same thing for all these markets. This is the NASDAQ from here. This is the Dow Jones. So by looking at this level here, let me actually bring up this chart here. And one thing I'm noticing is, I just remembered. Remember I said before, right? I just mentioned a minute ago that false breakouts happen for 1 or 2 reasons. 1, because when the breakout happens, we've got a flat moving average. Or 2, if we have a major resistance point through here and the market goes up, 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 and then we get a large breakout like that there, that's when things like, remember Barber, right? That's where Barber broke up and broke down. What market is doing this right now, by the way? It's something that, do you guys know what I'm talking about here? Let me show you this here. Barrick. Look what Barrick did today. And the reason I bring up Barrick is because now a lot of people are like, John, you're an idiot. Barrick is up 10% today. And I'm like, please, please stop looking at the short-term movement and getting excited about this. Because, yeah, we broke up. Now, if I bring this chart up here, what does this chart look like? Firstly, we had a big move for a few weeks, and then we broke above significant high. Say it with me. Barber. You see what I'm saying here, right? This is why I thought this is where the end of move is starting to come into play, not the start of the move. We just need to understand the patterns here. So see how Barber actually ran up for a couple of weeks into the resistance. We broke up, but then we end up getting through a bit of a pullback. Let me go back to Barrick now. Okay, and as you can see, yes, there's a major resistance, and yes, we've got a breakout. But two things. One, we do know, even if Barrick is in a very big bull market, we do know the market Barrick is not just going to keep going up, right? How do I know that? Because just look at the chart and tell me whenever does the market just keep going vertical like this and it just keeps going. Never. Okay, we just know that. But also, secondly, we can see that's the first thing I'm looking at there. But the next thing I'm looking at is what? Look at that. Look at the volume spike. Typically, when you have a very big move like this here, and it's had no pullback, and it broke out, that's probably going to be resistant. It's probably going to be a false breakout. But typically, what happens is when you get that, and you get a massive volume spike like that, that's now probably exhaustion volume in the move. And so therefore, we're probably then going to now experience, we're in a very big, strong trending market there, right? This here is not a trend. This is one leg. What is a trend? A trend is what? The market goes up for a while, then we have higher lows and higher highs. Let's go back to the weekly chart. So yes, I do believe this is the very first big leg overall in Barrick Gold. But don't be thinking that this is just going to keep going straight up, because you can just see what's happening here, right? If this is going to be a very big bull market, what are we going to see? We're going to see the higher lows, right? Higher lows, higher highs is a very big bull market. We know that. That's technical analysis 101. Well, if that's the case and we know that, look at this here. We've had a very big move up. We do know eventually we're going to what? We're going to experience a drop, because the market has to drop to form the higher low. And see what I'm saying here? A lot of people actually forget that. They think a drop in that is the trend is over. No, a drop sometimes is making the trend, because that's what it has to do, right? Even in bearish environments, right? Down, up, lower, high, down, up, lower, high, so on and so forth. So for this to have a drop for a couple of weeks to come down, all I see that doing is what? Just forming the higher low. And then that's when you start to see that very big bull market. So that was something that I just noticed there. In my comment section, people are getting really excited about Barrick. And I'm just like, here are some, and now, as you can see, this last bit here in this video here, I've been really trying to sort of walk you through the process of, I trade breakouts myself. And so I've learned this through the hard way. And this is a concept called price and time. This is something that I've learned from WD Gann, price and time, right? Price and time must be balanced. Price and time must be balanced. When we've done too much price, which means we've done too much movement in one direction, we've done too much movement, therefore time needs to catch up. What is time? This is exactly the reason why gold went sideways. And I'll show you this here as an example here. Right? So see this here. If I bring this up here, so price and time, price and time, price and time. You can see all markets do it, right? So for people who are getting excited about Barrick, please don't be loading up or leveraging right now. I think it's going to the moon, because look at the chart, right? Look at the chart. Look what's happening here. Now look at this here, right? It's called price and time. Price is when the market has a move up, and we've done a lot of movement to the upside. We inevitably we're going to go through a bit of a correction, or at least a sideways period. Now that sideways period is what? That is a correction first, because we went up. We had actually a 10% drop, but then we overall went sideways, and then we had a break up. So it's called price and time. Price is when the market hasn't moved up for a while. When we've done a lot of price, we've used a lot of energy to move up. The market's probably going to come short-term tired, and then we need a bit of a resting phase for a while. And in this case, it was 3-4 months of just doing that. Couple of months there, couple of months there, as you can see. I've gone through those resting phases. And this is the way, see how the market swings, right? We go up, and then we go back down, up and down, up and down. So once again, if I bring back Barrick, that's actually Boeing. If I bring back Barrick, you can see what I'm looking at from there. And this is for all the whole mining sector. Right, look at this here. Look at GDX. Same thing, right? Look how big that move is. GDX. This is the GDXJ as well too. So if you just see the structure of these markets, and we're actually getting towards that level there, we can just see, right, if this is going to be a very big bull market, remember, what is the bull market? The bull market is higher lows and higher highs. Trade with the trend is your friend, right? Cool. How is a trend formed? Is a trend formed by it just going straight up like that and just keep going straight up? No. If this is going to be a very big, overall big bull market in the mining stocks, which I believe it is, then we're going to see potentially a bit of a correction. And most of the time, we have a bit of a correction around 50%. So I wouldn't be too surprised for the drop. So as the mining sector is having a drop, all you need to say is, I was expecting this because we've done a lot of price, we've done a lot of movement in that direction, and we just need to have a bit of a cooling off period, a bit of a pullback. Why? Because then that's how up we go, and then a pullback, and then there's a very big bull market. Makes sense? And this is where, like all mining sectors right now, and it's actually not that complicated, right? When you start to understand the concept of when the market goes up for a while, up, we may continue up, but eventually there's going to come a point in time where we come back down, because then now it's making the trend. It's not a change of trend, it's just making the trend. Because in the up, down, the market has to come down a little bit, which is just a nice healthy correction to form the higher low, and then away we go again, and form the higher low, and away we go again. And once again, when you look at the gold chart, this is a really, really, really powerful representation of what that is all about. We have move up, and we have a really nice good pullback, and a move up, and a big pullback. And see that there? Gold, even gold, which is so-called, all that sort of stuff, even gold goes through these swings. Every market goes through this swing. So if the market's been going up a lot for a few months, you know what's coming, right? You guys on Barrick Gold, look, just see what I'm saying? Like, I'm trying to share with you, but do you see what I'm saying here, guys? And this is where, like, when it comes to that webinar that I was telling you about before, which was this one here that I'm running, whereas this one here, this is where, like I say, that how to eliminate confusion and complexity in your own trading. Do you see what I'm saying here? Look at all this information I'm giving you right now, and it's just really based on what? There's so much power in the chart itself, right? And then just simply using one moving average from there. In fact, yeah, we can just say one moving. So that's all I'm calling for, guys. So and just because if you see the truth from these markets, you're like, oh, okay, cool. Well, I don't know when this is going to happen, but if Barrick Gold is going to be in a very big bull market, and same for the mining sector and SIL, if these are going to be in the very big bull market, and the GDX, if this big breakout here, this is a very big bull market and it's going to the moon, and here we go. Yes, I believe all these markets are going to the moon. I believe gold's going to go to the moon. But as we talked about through here, right, we need to understand the phases these markets go through to create that moon action. It's not just going to keep going straight up, even though people hope to see that, especially when you're in a trade. And right now, come the next few months, guys, we're going to see we're going to experience a nice big correction out of this level here. Now, you don't want to be shorting this market right now, because you never know when the top's going to be in. I see some people going, I'm shorting the mining sector right now. I'm like, that is crazy. The overall big bull, it's still a big bull market. You don't short a big bull market, you just try to step aside so you're not getting hurt. It's definitely some people now shorting the bull market. Anyway, never short a bull market. Wait for the drop first, wait for the pullback, and then look to re-enter on that next leg to the upside. And again, this is the reason why, like, when you come to the really big picture out of gold, if I go to the logarithm chart, some of you guys love that logarithm chart, and I can bring this up to here. All I'm looking for is this level here. What is this? All this is, if you look at this from a big, large perspective of what I'm saying out of gold, is this. Everything I've just said here in the last probably 10, 20 minutes about how these how the markets truly work on a deepest level, so we can just be smart about what we're doing here, right? The market goes up, we go sideways. It goes up, pull back, up, pull back. You see what I'm saying here, right? Up, up, pull back, up, 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 up. We may have a little bit more upside, but what is going to come? If this is going to be a very big bull market, which gold is, we're like what? We're going to like to do what? Come back down, 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 down. And all that is doing overall, if it comes down for 12 months, is low, higher low, and another significant major high low on this big long-term charts, and then away we go again. See that through there? So we're going to experience that pullback out of gold. Gold's not going to just keep going straight up like it is right now. Just look at this chart here. Tell me when gold just keeps going vertical and never stops. You see what I'm saying here? We just got to forget our thoughts and opinions and egos and this is how I've become pretty good. And this is how I've become really good at trading. I try to stay humble, but I'm part of the 1% of all traders around the world when it comes to my income. But see what I'm saying here? I've always said, what is the truth of this thing? Not what I think or hope, what is the truth? So I can start to make much better decisions long term. See what I'm saying here? So for me, I was actually I was trading gold on this breakout through here, but now I'm starting to put warning signs on. But as you can see, the warning sign is just we've done so much movement in the last couple of years. We just need a bit of a cooling off period for maybe 12 months or 12 months. And then we're likely to see ricochet rabbit to the upside. So there we go, traders. I hope this really helps you out with your own trading and overall from there. Once again, guys, if you're struggling with your trading right now, guys, and you're confused, I've got 3 secrets on this training here. The very first secret I walk you through is everything that I tried so much. And the thing that actually caused me to go losing a lot of money, $250,000 in debt. And I promise you that's going to really help you out there. Or if you would like more, if you are serious, a bit more discipline, a bit more serious around these markets, then you may be a good fit for my 1% coaching program. That's where you're with me every single day. Not only do you get access to my strategies, but you're actually with me every day, part of a real small group. There's about 15 people in that group right now. So not only do you get access to strategies, but you become part of a group, right? And you know who you hang around with is who you become. And so you're part of a community, we become like a family unit where we're together, and it's amazing. We come together for an hour or so per day. It's an amazing, amazing, amazing group. So it's a premium group right there, and it's only for the top people that I select. That's application. So if that sounds good to you and you want to have a chat and learn more information about it, then there's that second link in the description there, guys. That's an application form, and I'll talk to you guys real soon.